Hey, what's up, you guys? Welcome back. In today's video, we're going to do a quick update for JASMY. Right now, we are trading at 8601, you guys. As we can see in our my last video here, we were observing on a 4-hour chart the attempt of breaking through our 20 MA, because what we did and observed in that video is we actually broke through and closed well below it in a bear market instead of a bull market of this uptrend on July 20th. And ever since, we've been retesting our 20 MA as a resistance line, coming close to it, but failed to break above it. So our video here was roughly around this candlestick here. We can see the candlestick as we were coming up, going into a shooting star. Again, the shooting star was a hint it was going to go into more of a bear market, and it confirmed with our spinning top right here at the very top or near the peak of it. Essentially, these two basically shows us that there was weakness in the buyers itself, couldn't push the session or the 4-hour session at the very top here of our candlestick. Therefore, the bears took over. And through this channel, what we're seeing is we're coming down with a low, coming up with a resistance, making a lower low compared to the other peak, making a higher low compared to the other peak as well, and going through this channel. So what we need to be able to observe for JASMY is we need to break through a couple of key resistance zones. So we can see right here, we found support roughly around the 78% of our fib chart, which is equivalent to 8750. So we need to be able to come back up and test this as a good support number as well, because we can see bounced up right here as a good support coming up to the next channel, coming down, bounced through support, however, didn't create another high from that session. So again, what we need to be able to discover for JASMY is to come up and use this as a good support barrier, and then finally breaking through our resistance of 8963. And if you guys can see that, that's closer to our 61% of our fib chart. Now, once we see and observe our Bollinger Bands, so our Bollinger Bands squeezed in, and this was an alert here that we were taking a look at in our last video. As they squeeze in, we knew a breakthrough was going to happen, because as it squeezes in, it's lower volatility. If you imagine the pressure of the markets, one side was going to win, either the bears or the bulls. And in this case, the bears have won because we saw a rejection of our 20 MA. If we were to break over our 20 MA as this squeeze occurred, then we could have came up closer to the 9537 or 38% of our fib chart. However, we fell short on that. So that's why it's really important to be able to break through and stay above moving averages. So what we can see and observe from our Bollinger Bands is two things, you guys, is that we are squeezing in, we are narrowing. That means consolidation. We're going to go sideways. However, we can see the top Bollinger Band is angling upwards and the bottom one's angling upwards. So what we can experience is that the volatility is going to increase. That's going to work in our favor of having a tested resistance, going up and retesting these resistance and weakening the resistance to finally break through. Another observation too with our Bollinger Bands is that at the very bottom here, okay, at the very bottom, whenever these prices or these candlesticks touch at the very bottom, it's considered quote unquote being oversold and an opportunity of buyers to take over the market. Another thing too that we can pair off our Bollinger Bands is our RSI. Take a look at the lowest RSI here from this candlestick point. We were as low as 33%. Okay, pairing these two off, there is a probability or a higher chance that the price is going to bounce back up, retest our support, and retest our resistance. Now, another thing too I want to show you guys as we kind of scroll out to see the history of RSIs and Bollinger Bands, because they do work, and we do see a few touches here coming close to the bottom of the Bollinger Band. Take a look at our RSI here, 32%. Another indication over here on June 18th and June 17th, really close to the bottom of the Bollinger Band. Our RSI here indicated at 35%, closer down to 33%. Now, I'm not saying that 33% is the lowest, and we're going to have a quick reversal, because you can see here, back here on June 12th, there was RSI as low as 22%. But again, where was the price indicated? Where were the candlesticks indicated or close to? Near the bottom of the Bollinger Band. So what we can observe and what we can assume what's going to happen is, because we have a low RSI here, currently right now we have 32, but because this candlestick has not closed, we don't want to observe this one yet. So do our prior one, which is 33%, and closer to the bottom of the Bollinger Band, we could predict that the price is going to come back up. However, we don't know how far it's going to come back up or the strength that it's going to come back up, because we can see our MACD indicator at the very bottom here has already initiated. The bull market has ended, or the bull trend has ended, and we're going into more of a bear market. If we do see these histograms or these bars lighten up, then we can anticipate that the price is going to move closer to our support line here, or tested support line that we want to make sure we can test again in hopes to breaking our resistance line, in hopes to getting out of this downward channel. So that's my quick update here for Jasmy. Thank you guys so much for watching. Like, subscribe, and comment down below, and I hope to see you guys in my next video.